Okay, so in this recorded lecture, we will have for accounting for GST. Okay, so I'll present a sample problem and I'll also present the journal entry, and also that will include how much is refundable or payable for GST in each month. Okay, so our sample problem, we have ABC company, a GST registered in PNG, which purchased 110,000 kina worth of inventory on account from DEF, also a GST registered company. Then half of it was sold on 24th February for 66,000 kina. XYZ is not a GST registered entity. On 28th February, the ABC company partly paid DEF for 33,000 kina. All these amounts that you can see will indicate if it is GST exclusive or inclusive. In this case, the amount paid in February, 5th February, and then in 24th February will be GST inclusive. Now, receive payment from XYZ company for all the amount outstanding, 3rd March, and then paid the remaining outstanding balance to DEF on 5th March. So we were required to journalize using the invoice basis and payment basis. Okay, so the solution under the invoice basis, it will be 5th February, we have debit inventory, debit GST paid, or the input tax, and then credit accounts payable, okay, 100,000. So you will notice the accounts payable, that will be the total of the invoice price, 110. The actual cost of inventory will be 100,000 kina, but the GST paid is 10,000 kina. So that will be 10% of the cost of the inventory. But if you compare it with payment basis, there is no journal entry because there will be no amount paid on this transaction. So you can only recognize GST when paid under the payment basis. Now on 24th, there was a sale. Okay, under invoice basis, this is a sale on account, so debit accounts receivable 66,000. Credit GST collected 6,000, and then sales 60,000. So you notice that 60,000 here is the cost, or sorry, the sales price. Then 10% of that one will be 6,000, which is for GST. The total amount of the invoice on this transaction is 66,000 kina. So in the information provided, it says half of the inventory were sold. So the cost of our inventory purchased last time is 100,000 kina, so half of it, the cost will be 50,000 kina. So debit, cost of sales, and then credit inventory. Again, no journal entry or entries on this transaction under payment basis. You will only record transaction if you are receive the money under payment basis. Now on 28th, we paid the amount. Partly paid DEF, we have 33,000 kina for the accounts payable, okay. And then credit cash 33,000. Now if you notice in payment basis, we have just recorded the inventory 30,000 and then GST paid 3,000. Okay, so in this case 3,000 will be the 10% of 30,000. Then the total cash payment made was 33,000 kina. Okay. So this is the time that the company needs to recognize the GST paid because they already had a cash outflow. On 3rd March, under the invoice basis, we receive money, debit cash, and then credit accounts receivable. And then on 3rd March, under payment basis, that's the time that we will recognize GST. Okay, the GST collected. So debit cash, still the same 66,000, but on the credit side, we have sales 60,000 and then the 10% of that 6,000. So this will be the time for us to recognize the GST collected under the payment basis. So if you compare 3rd March under the invoice basis, we don't have GST collected there because we already recognize it during February. But for payment basis, it will be recorded here because when you only receive the money, then you have to record GST collected. Now on 3rd March, the same debit cost of sales and then credit inventory, the same on the original, not original, but on the recorded sales under invoice basis. Now on 5th March, we have this. We have to pay all the outstanding balance. So we have debit, accounts payable 77,000, and then credit cash 77,000. This will be under invoice basis. If you compare it with payment basis, that will be debit inventory, debit GST paid, and then credit cash. Now this will be the time for the company to recognize GST again because the cash outflow happened. Unlike in invoice basis, we already recognized the GST paid on this transaction last month. Okay, comparing invoice basis and payment basis per month. So on February, you can see we have GST collected under invoice basis 6,000 and then GST paid 10,000. So you get the net amount. If GST paid is more than the GST collected, that will be GST refundable. If the opposite happens, then that will be GST net payable. Okay, so in this case, February, under invoice basis, we have GST refundable 3,000. But for the payment basis, we don't have GST collected, but we have GST paid 3,000. So the GST refundable on this month or on February under payment basis, that will be 3,000. On March, we don't have, in this transaction, we don't have GST collected and GST paid because all those had been recognized on February. But on the payment basis, we have GST collected. This is the time that we had recognized the GST collected because we recognized or we recorded the sales when it happens or when we collected the money, unlike in the invoice basis where we are using accrual, wherein we will record the sales when it happens. Payment basis when we receive the money from the customer. GST paid on this transaction we have, or in this month, we have 7,000 kina. Okay, that is coming from the payment that we made to the supplier. So we get the net amount. We have GST refundable 1,000 kina. So the timing of recognition of GST collected and paid will be quite different on each basis. Okay, so invoice basis is using the accrual. So we recognize transaction when it happens, regardless of whether the cash had been received, particularly on sales. And when we don't really mind if the cash payment happens under accrual basis, as long as we incurred or we acquired, especially inventory, we will recognize it, and input tax will be recognized. Payment basis, that is quite different. You will record sales when you receive money from the customer, and you will recognize expense or recognize the purchase when you had paid the amount. And that's it for my presentation. I hope you learned something.